There you go. What's up, Chad? Happy Aloha Friday.
Hey, happy Friday, buddy. Good to see
Yeah.
you.
Yeah,
Yeah,
dude.
Willie's here. He wanted to say hi.
Willie.
He's
Hey,
he's there. Good.
pal.
He's
Dude,
there.
he's grown.
See him. He likes Aloha Fridays too.
Heck yeah. Who doesn't? He's big, man.
Yeah, he's 90 pounds.
That's
Ready to
huge.
make some money.
He's bigger than me.
Yeah, exactly. So what's going on?
Oh man. Well, we kind of been on a hiatus for about 3 weeks.
Couple
So
weeks, yeah, we were slacking. We were slacking, but we were
yeah.
all busy.
Yeah, it was, I mean, with the heat and then the fires and all the other stuff that's been happening around here. It's just been crazy. But first, foremost, thank you to all the firefighters out there. You guys are,
You guys are
and gals,
legends, every single one of you.
yeah, you guys and gals are
Seriously.
like epic. So thank you guys for saving a lot of people's houses and lives. So it's awesome.
Yeah, big time.
Hey, so we were chatting before we started the video here, and I feel like there's this ethereal thought out there right now, which is I'm gonna wait until the real estate market drops and then I'm gonna buy, whether that be for personal residence or for investment purposes. So I wanted to get your take on, do you feel like there is going to be a drop? And I guess for me, like, I like to look at the history of what's happened in the real estate market and stock market and that kind of thing. And I guess touch on a little bit of what happened in 2008 and 9, and we'll see if
Yeah.
there's some synergistic ideas there.
Well, I mean, I've been getting that question since the day I started in this business, which is, oh, we're gonna wait,
Yeah.
we're gonna wait, and the answer is always going to be the same, and it will always be the same. And I heard this from a friend of mine, Steve Lincoln, and he said, well, my crystal ball's in the shop, and the truth to that is that you can only work with what you know has happened historically. You can only work with what's happening today, because anybody can speculate like what's going to happen tomorrow, and 50% of the people will be right and 50% of the people will be wrong. Obviously, there's economic indicators that will point to certain things in whatever market, whether it's a real estate market or whatever, that can trigger things like that. But if the people that wait are the people that usually get hurt, because you can always wait for the perfect time, but nobody actually knows for sure when the perfect time is. There's always things that can happen. A catastrophic event can happen tomorrow and we'd all be screwed in that regard. So I think the important thing to think of, especially when buying, and will always be true, is can you afford your mortgage payment? Do you see yourself staying in whatever job that you're in that's allowing you to be able to afford that mortgage payment, and for the foreseeable future? And it is a sort of a long-term hold, and by that I mean at least 5-6 years minimum, preferably more like 10 years, because in Southern California, over time, no matter what, you're going to make money on your house over time. But if you get into it and you're like, oh, in 2 years we're going to make all this money, where you pull out every tiny bit of equity along the way and refi and pull out equity and refi and pull out equity, and all of a sudden you owe $900,000 on a $700,000 house. Well, that's when we saw the short sales. People owed more on their houses than they were worth because they thought it was going to go up forever. So the key is, don't use your house as an ATM. Key number one, and work with what you know today. Don't speculate on the future, because everybody asks me that. I get the question all the time, and my answer is this every single time.
Yeah.
As far as 2008 is concerned, it was just a matter of deregulation of lending. I mean, people were getting loans they couldn't afford. They were doing stated income loans. There's a scene in the film The Big Short.
Mm-hmm.
And I think Steve Carell's character is sitting in a strip club, and he's trying to figure out what's going on in Florida. He's down in Florida, and he's in a strip club. And I remember, and he's trying to figure out if there's a short. There's all these economic indicators that these are the only guys that are seeing it, so they're betting against the market.
Right.
You know, they're seeing what's going on. So he goes to this strip club and he's getting a lap dance from a stripper because he's literally trying to see what's going on. You know, and she's kind of dancing on him, and she says, "Yeah, I own 6 houses." And he calls his buddy right outside. He says, "There's a short," you know,
Yeah.
because these people were getting loans on houses they couldn't afford, and there was no regulation in the lending industry at that time because they were giving away money right and left as fast as they could, which ultimately caused the crash.
Right.
Now the regulations are much stricter, and in fact, the underwriters will go so far as to do another employment check on the last day of escrow. I've had it happen recently, especially with COVID and people being furloughed. They'll call the employer on the last day and say, "Hey, is Skylar still employed?" And they're like, "Well, yeah, kinda." What do you mean, kinda? You know, or yeah, he's still employed, and you know they fund the loan. But the regulations have become super strict, and people on the lending side, when they're buying a house, should actually be prepared to give away their soul because there's so much paperwork, and like they want to know why you pulled $20 out of an ATM in 1987. You know, they want like an explanation letter. So you know the regulations have been implemented, and it's a lot different now than 2008 for that very reason. Good. It was like the Wild West back then.
Yeah, and those are all super good points. And I guess like the thought there is then, regardless of whether or not you think real estate is going to go up or down, it's still going to be there, you know, like, and you're going to have to prove that you're going to be able to pay, you know, the mortgages or whatever.
Right.
So from that perspective, I can't foresee the real estate market going or crashing, so to speak. You know, I mean, it might dip a little bit here and there.
Especially right now, we're seeing multiple offers on everything. I have a listing in Vista. I have 5 offers in 3 days.
Yeah,
I should be having another one by the end of the day, and we're responding today. But that's on everything. You know, I'm lucky to be on the listing side right now, but when you're on the buying side, it's impossible to get offers accepted because there's so many people with cheap money. You know, maybe that's a problem. I don't know.
Right.
We will see.
Yeah, but yeah, I think to that point, there's you know, having the stringent rules that have been you know, basically placed in lending, and finding opportunities for real estate for either, you know, residence or investment purposes. It's hard for me to imagine that the market is going to drop, or the real estate market's going to drop when things, especially around here in Southern California.
Yeah, like, I mean, that's a good point. Is California real estate over, like I said, in California, keywords, over time, you're always going to make money here. Like you've never not made money over time. Like the trend has gone like this forever.
Yeah.
But there's other places in the country I can't speak on. I mean, the old saying is, yeah, you can buy a house in Detroit for 50 grand, but in 10 years, it'll be worth 50 grand. You know, the idea here is you buy a house for 500 grand, and in 10 years, it's worth 750.
Yeah.
Or 800.
Yeah. Yeah. You know? It's a very sought after location, right? Like around the country, everyone wants to live in Southern California, or at least a lot.
California is the best piece of real estate, in my opinion, on the planet. I mean, we have everything.
Yeah.
Forests, ocean, desert.
Yeah.
San Diego.
Which, in particular, I think this is a market, real estate wise, that people have started to, you know, keep their sights on, because it's like, I mean, North County is such a mellow, cruisy, awesome location. Weather is perfect all the time. Like you said, like there's so much stuff to do. So yeah, I don't think, I can't foresee a housing crash, especially now, like after COVID. People are going to be living and working more out of their house. So, you know, like commercial wise, maybe there could be a little bit of a dip. I would imagine that that's the case. And it,
I think there is a dip commercial wise a
yeah,
little. I think you're actually spot on that
yeah,
because I've probably received 2 or 3 phone calls in the last month or two having to do with commercial real estate questions
hmm,
that I'm not always the guy for, but it was definitely having to do with COVID and having to do with what do we do now? And
yeah,
I'm like, well, let me put you in touch with a commercial guy, but not good for
yeah,
sure. And I think
yeah,
back to your statement about, you know, the residential side, I think part of the reason the Fed has made the rate so low is to obviously keep the confidence in buying up, which it's there. But yeah, I think you're going to see commercial here, residential here, residential's going like this, and commercial's kind of going like this.
yeah, yeah,
So
yeah.
you know,
Who
scary
knows?
times for the
Yeah,
people that own a lot of commercial real estate. But I think it'll bounce back at some point,
yeah,
probably next year. But
yeah. We'll
that's
see.
for sure.
I hope so. I hope so. Not only for just, people being able to go and return to the social aspect of working, right? Which is like you have an office or a location that you work at or work out of, and that's where you go to, do everything. And there's other people that are there too. And I don't know. I appreciate I appreciate that side of the commercial business, right?
Yeah.
So I don't know. We'll see how everything
What
goes.
about the markets on your side of the fence? The
My
stuff I
side.
pay little attention to. I should pay more attention to, but uh,
Yeah.
we kind of touched on that before too.
Yeah. It's so I think we've had a few weeks where there's been some hiccups, and like I was explaining, a little while ago, tech is a huge component of, the broad markets, the S&P 500, the Nasdaq, and that sort of thing. So when when the when tech companies or when tech stocks like start to falter a little bit, then they bring the major indexes or the indices down a little bit. So it looks like like we're having some trouble right now. Um, I think that people are starting to realize a little bit more that the valuations that some of these companies have are pretty high, like historically high.
Mm-hmm.
Um, just as an example, traditionally and historically over the last 100 years, the S&P 500, the major index that most people kind of compare or benchmark their portfolios to, um, has an average of anywhere between 15 to 17 times earnings. Basically, what that means is the company stock trades 15 to 17 times more than what the actual value of the company is worth, or what that value of the company
Mm,
is worth.
okay.
So, and it's because, again, like I explained this before, but the stock market is a forward looking, or it's an indicator in which people believe, what the economy is going to do. Yeah, it's basically just a forward looking indicator.
Okay.
Um, so since the whole COVID thing, obviously tech has been a major component of people's lives because we've had to, bob and weave and figure out what the next stages are of business and everything. And so these companies are, doing much better because people want to be invested in something that they know is going to have the opportunity to grow a little bit more because people are using more of it. So from that perspective, again, I think that there's a lot of people and maybe some institutions, whether that be here in the United States or internationally, they're probably looking at things and saying, okay, like we've got a little bit of traction on the upside. Let's maybe take a little bit off the table. And so that's basically causing a lot of the markets to kind of drift down a little bit. And so we've seen that over the last couple of weeks. Really interesting. There was a Bloomberg study that came out, I think it was like a week ago. And one of the things that they were noticing is the trading that has been happening is different and at different times than what it had been before COVID. So as an example, generally during the day from 9:30 to 4 p.m. Eastern, that's when the market opens up and people start trading and buying and selling stocks and, that kind of thing. And then once 4 o'clock's over, the market makers are the people who actually take the securities from one custodian to the other, or from, Fidelity to Schwab or whatever it is. Those market makers go home, the day is over, and basically trading stops until the following morning at 9:30. What they've seen is, Bloomberg did the study, but they've seen that trading has actually sped up in the after hours. And I think a lot of that is because of, the online apps like Robinhood and some of the other, free trading platforms that are out there.
Question, sorry to interrupt you. Did the trades actually go through after hours? I mean, or are they like trades until the market opens in the next morning?
That's exactly how that works. Exactly. So people after hours, let's just say, as an example, Apple hits $100 a share. And at 4:30, the market closes and Apple's worth $100.
Yeah.
After hours on these online trading apps, a lot of people want Apple because, after they came out with some new iPhone or whatever, like the news, the PR of the day, it basically makes people want to invest in Apple more because, it's a valuable stock and company. So what'll happen is, after hours, these people and some, maybe some foreign institutions, they'll jump in after hours and start trading and say, I want to buy Apple. And so after 4 o'clock, the stock tends to start rising because it's worth more, because people want it, right? It's like, it's a supply and demand thing. So what'll happen is, until the next day, as Apple continues to go up in value, let's just say it goes up to like $105 a share. Well, the following day, it'll open up at $105 a share. And so what'll happen is, as that continues to kind of be the case, like, after hours, week after week, it just continues to drive the price of these stocks up. And I think a lot of what has happened in the broad markets, that's been the case. People buy, the S&P 500 ETF, which is an exchange traded fund. It's basically just a basket of the same stocks that the S&P 500 are composed of. And it'll continue, and people will basically buy into it, and it continues to just drive the price of the S&P 500 up, or the index up. So yeah, so I think overall there's still I think that there's been a transition of when people are trading, which doesn't necessarily mean that the market is overvalued or undervalued. It just means that, the prices of these stocks have gone up because of, the after hours trading. Or it seems as though what Bloomberg has found, that's kind of what the case is. So just really fascinating stuff. And it would make sense. It would make a lot of sense to me, because for me, I see what the market is doing and where our economy is versus where the stock market is. I feel like there's a major disconnect between those two, basically those two things. So it'll be really telling to see how this next couple of weeks to months kind of plays out, through the election and everything else, because I still think that we're still in a period of economic activity where we're not where the stock market is telling that we are, or where we're going.
Sure.
So that's just I have this, the way that I try and advise people in investing and that kind of thing is very similar to what you were saying earlier, which is, over time, the market's going to go up. If you have a plan and you're okay with, weathering the volatility of ups and downs and some dips and some rises, like, that's kind of the way I think people should look at investing. don't freak out when things go, down 10% or 15%, and don't freak out and get really excited when things go up 10 or 15%. It's just,
Right.
it's just going to ebb and flow, and you got to be able to, you got to be able to have a plan for that.
And when you say that, I automatically, and I think a lot of people do, think back to the advice of one of the most successful investors of all time, Warren Buffett. And like, if you look at guys like that, he's not freaking out and selling when it drops or getting all excited when it goes up. He's just holding it forever. Mm-hmm. And look at him now. I mean, the guy's a wizard when it comes to the stock markets. And I correct me if I'm wrong, but he's sort of like, yeah, buy, hold, pretend it doesn't exist. I mean, more or less, I don't know exactly, a quote off the top of my head, but I know that that's sort of his philosophy. And he'd probably be the first one to tell you not to sell or get too disappointed if it drops 10% or 15% and you lost $70,000 in one day. Well, don't sell, because you'll make it up in 2 weeks or whatever. It just happened with Amazon in the last couple months. Yeah, I saw it.
Yeah, so what he does is he buys value companies, or companies that are undervalued but have really strong fundamentals. And by fundamentals, it's like how much they're earning, how much is going out, what's their operating costs, what's their net expenses, all that kind of stuff. And then he basically analyzes these companies and then buys it based off of what he thinks, or what, just finding value, right? And then he holds on to it for 20, 30, 40, 50 years. And as those companies continue to grow, because they're valuable, it's just going to only make the dollar signs or the zeros after the end of that stock more. So
another interesting thing about him really quick is a lot of people talk about living within your means. I mean, this guy's lived in the same house for 50 years in Omaha, Nebraska, or whatever, and he drives the same car that he's had since 1987. Goes to McDonald's. He's an interesting guy, and I think there's something to be said for living within your means. A guy like Warren Buffett, with the amount of money he has, living the lifestyle that he lives.
Yeah, I'm going
to take that into account.
Yeah,
this week.
Dude, for sure.
Warren Buffett mentality.
Yeah, I think that a lot of people end up, when they find that they're becoming more successful, they have the opportunity to spend more money and, either, whether that be for status, just to show like how, wealthy they are or whatever, or just to like feel good about themselves. But I think, to your point, at the end of the day, just like modesty, right? Like the wealthiest people that I know, they're exactly like Warren Buffett. They do not flaunt any money. They don't buy things randomly. They count pennies. They are very conservative with how they manage their money and how they spend it. And as an example, there's one person that I know, worth 25-30 million bucks, drives a 97 Corolla, and just awesome. wears Birkenstocks and shorts and just very, very modest. And you would never expect that he was worth 30 million bucks. You know what I mean?
There's something to be said about that.
Yeah. And so I don't know. I've always thought that I like to model my life off of that. I'm not a really big spender. I like to be conservative. And of course, there's moments where I like to splurge. I think everyone deserves it, right? Either going on a trip or buying
take the whole family to Soup Plantation, brother, with them on a coupon.
I don't know about that anymore, or Sizzler.
Yes.
But I think, it's at the end of the day, people deserve to live a life that they want to, and splurge when they want to. But just be smart about it, and things will be all right. So.
Yeah, man. Well, that's good. Thank you. And I wanted to give a shout out to not only do I believe in supporting local business, but another gentleman by the name of Skylar has a local business.
Mr. Ireton, yeah.
10-year anniversary. Skylar Ireton, guy's a shark. 10 years in Carlsbad Village, successful furniture company. So a little shout out to our boy Skylar Ireton for killing it and being a local, business that I've supported, and I've tried to get as many people as I know to support, because he's not only my buddy, but he's good. He runs a good business down there and good prices and really cool stuff. So 10-year anniversary, Skylar. You're the man. We love you.
Yeah, buddy.
And support a local business this week, everybody.
Yeah.
Whoever it may be.
Yeah.
Yeah. It's not always the cheapest, but sometimes it's the best because you're supporting people you know and like. And to me, I'd rather do that than go to Walmart and save, $3.
I'll tell you what, dude, like there's something to be said about buying local, and even if it is with a business that might charge like a little bit of a premium, you're going to get much better service and you're going to get a much better product. 100%. And that over the long term, dude, oh my gosh, like,
and especially now in COVID, support your local businesses as much as you can. So take that into the weekend, and that's all I got. You got anything else?
I want to see what your shirt says, because I think that's pretty important.
Make America grateful again.
We're going to get by. We will get by.
We will get by. So, obviously I love the Dead, but I also love this.
Yeah.
When I saw this, Make America Grateful Again,
that's
another thing to bring into the weekend.
Yeah.
So maybe some gratitude,
Yeah, we talked about that
so
before.
Angry at everybody, and maybe just a little bit of this.
Yeah, show more compassion and just be open. That's all it is. Just be open, man. This
throws people off, though, Yeah.
They're
like, wait, what? And then they see you steal your face, and they're like, oh, it's a deadhead with Make America Grateful Again. Oh, I get it, And so, it definitely triggers some conversation.
What doesn't trigger conversation nowadays? Yeah. All right, buddy. Cool.
Happy Aloha Friday, everybody.
Happy Aloha Friday. Take care. Have a good weekend, and we'll see you hopefully next week.
Cheers.
Aloha.